Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'll be giving you two paper money trades today on two high-profile names. Apple with earnings out after the bell today, and then we'll look at Nvidia as the dust settles from the DeepSeek news that came out Monday morning. First, let's get to Apple. The expected move is right around $9.70, pretty close to $10 in Apple is the expected move based on the implied volatility. It sits around 91.7% is the implied volatility of that event front expiration. So if you look at the chart of Apple, it rallied right around Christmas to $260, sold off violently to below $220, held that 200-day moving average around $219, and now has rallied back to $238 just in the last couple days. So what does that mean for their earnings? Is it going to be iPhone sales? Is it going to be services? Is it going to be iPad and Mac? What's the driving force from Apple's earnings? I still believe it's going to be iPhone sales and the super cycle expected for the upgrades to iPhone 16. Let's see if that materializes. Now, based on a stock that's gone to 260, it's gone to 220, currently sitting just under 240. I have no idea where Apple's going, and I don't think anyone really does. It'll be how the market digests the news, so let's get a trade. So the paper money trade we're looking at here is the double calendar, similar to what we've been doing in many names. Why? Because this gives you an opportunity to be successful if Apple makes that one standard deviation move up or down. Now, it's two calendar spreads that make up the double calendar. You can do one, the bullish trade, which is the 250 call calendar, or you can do the bearish trade, which is the 230 put calendar. We did just 1 week, February 7th to January 31st. The debit on the put calendar is about 80 cents, where it's trading now. We put it in 80 cents, trading about 80 cents. That's where it's trading. The call calendar, trading about 85 cents. It's trading about 81 cents. So probably around $1.60 for both of them. That would be the risk on this trade, is whatever the debit is. And you're looking for a move, either $10 to the upside towards $250 or $10 to the downside towards $230. A catastrophic move in either direction, past or one that maybe sits around 240, would work on the profitability. It would, this trade would, you'd have the 160 debit at risk on this trade. 160, 165 in that area right there. So the double calendar, taking advantage of the 91 implied volatility in the front expiration, and just 1 week out, it's 44. So think about that. That is an inexpensive way to put on a play in Apple in either direction. So that's the Apple trade, a double calendar, the opportunity to be profitable in either direction. Our second trade of the day, Nvidia. The dust settling after DeepSeek. As you know, Nvidia traded significantly below its 200-day moving average. The 200-day moving average in Nvidia, why we're talking about it today, $122.30, let's call it. It's holding, actually, it's just, since we've been, in the last 10, 15 minutes, it has sold off back down below that level of $120. Now it's trading $119.37. So the paper money trade we're looking at here, the call diagonal in Nvidia, buying the 123 call in the February 21st. Now, careful, because February 26th is the earnings for Nvidia. So you have to be careful trading ahead of it and then after it. So make sure always when you're trading, make sure you know when the earnings event is. And this time in Nvidia, it's February 26th is what they're looking at. So buying the February 21st 123 call, selling next week's February 7th 130 call. Now we put that in at 465, probably trading less than that now. Yeah, it's trading closer to $4 now. So it has lessened in price as the price of Nvidia has gone down. You can adjust either the strikes or you can adjust, whatever you're doing here and just keep it as is and buy it at a lower price. But buying the 123 call in the February 21st and selling the February 7th 130 call. Trading, like I said, we put it at 465. It's trading closer to $4 right now. The risk on this trade is, again, the debit paid on a call diagonal. You're looking for a move towards $130 by next week. That's where that profit graphic you see there would peak out, right around 130. You're collecting theta each day. You are risk defined, and you're looking for a move, like I said, towards the 130 strike. Okay, there's our earnings play in Apple, the double calendar, and a bullish call diagonal in Nvidia. That's our show for today. I hope you enjoyed Daily Trader. I'm Kevin Hincks. Have a great day. We'll see you tomorrow with another edition of Daily Trader.